Hello and welcome to another update video about Bitcoin. So yeah, we see the expected bounce, so that was good. Yeah, it adheres really well to that triangle wave count here. Let me move that out. I won't focus on the larger time frame because nothing really happened. I mean, since last week we've been moving again in a range, yeah, in a boring range. At least it's a little bit of volatility there. It's not like up here where we had literally nothing. At least we see a bit of volatility. Again, adopting a triangle count so far has been the right decision. I know in the comments there have been lots of different opinions, and yes, they are all likely options, but I always say, you know, until you see something, you have to go with what you see, really. Until you see something different. What we see at the moment is a possible triangle count. Yeah, and I highlighted to you before that as long as we stay below the A wave high at 30,050, the expectation is that obviously this is a triangle and we will break down, yeah, or that we're already on the way down, because the 30,050 level will be the invalidation point for the triangle. Above that level, we get a higher B wave, and even then, the current scenario wouldn't change. I mean, what is the current scenario? The current scenario is that we are in a B wave. Now, the B wave can unfold as a high B wave, indicated here and as communicated in the last video as a possible WXY structure. And in the Y wave, we have an ABC, and in the B wave, another ABC. So don't worry if you don't understand that. That's just the academic side of it. The point is here we can get a high B wave, yeah, in a WXY structure. That would be the alternative count on this smaller time frame, and would only become my primary above 30,050. But as long as we stay below $30,050, the idea is to break down in a C wave. Yeah, and even if we make the higher B wave, current structure would still suggest that even if we make that higher B wave here and get into the resistance zone, we should see that C wave to the downside eventually. Okay, so it all depends on the time frame you're looking at. Don't forget that really trying to do subwave structure counting here on an Elliott Wave triangle on the 1 hour chart is already tough. I'm actually surprised how well it's adhering to my wave count. But yeah, it works, you know. It's just that be aware of the key invalidation points. So to the upside 30,050, to the downside, and that would be the breakout point confirmation, 27,260. Now the alternative, let's say the direct breakdown count would be this. Yeah, someone asked me, could I show how it would look like if we're already breaking down? This one, the blue one, yeah. Because then we could say we already topped here at this high at 29,930, and we're already coming down in the C wave in a 5-wave move. Wave 1 could be done, and this is now a wave 2. Now this is very much in line with the count of a triangle now, because it doesn't matter if this is a pullback in a wave 2 or if it's the E wave. It will have an impact later on targets, but not now. So you won't necessarily know what is the, you know, which one is it? Is it already a 1-2 and we come down in 3, or do we start the 1-2 after the E wave top? So that's a bit of uncertainty, but it doesn't really matter for trading at all, not in the short term. Yeah, so that's it. I had also a question in the previous video about, you know, what are the sort of statistics or odds or probabilities that an E wave really breaks out to the opposite, well, that the triangle really always breaks to the opposite side of the E wave. Well, there aren't really any statistics, yeah, so I can't say, and it doesn't really matter too much. So probabilities, it's not like, okay, in 65% of cases it's doing this or that. There are no studies, as far as I'm aware, about Elliott Wave, and even if they were, they would be flawed. And why is that? Well, it is just simply because a lot of the interpretation comes down to experience. Okay, so you can take some statistics and you can observe an Elliott Wave analyst and you can take statistics, but that person might not be very experienced. So you get different results. Then you get someone who is experienced and you might get different results. And even then it wouldn't be objective. You couldn't say, okay, an Elliott Wave triangle, let's say really in 70% of cases breaks to the opposite side of the E wave as it should, because different assets have different characteristics, and Elliott Wave analysis allows us to understand that. Just an example, in crypto, Bitcoin likes to do a lot of WXY structures. Yeah, and you need to know how an asset behaves. Whereas, for example, in commodities, you don't get so many WXY structures, okay? And you really only get that knowledge by experience. And we need to know the key, Elliott Wave has some predictive powers, absolutely, in my opinion, more than other technical analysis methods. But as I always say, the value of Elliott Wave analysis in a limited way lies in the predictive powers, but even more, it lies in understanding the different possible scenarios that there are, developing a trading plan around it, and understanding where risk sits. Where are the trade setups? Where are the low risk, high reward trade setups? You really only get that with Elliott Wave. I mean, you can get trade setups with other methods, but Elliott Wave always will give you the roadmap together with the trade setup, will give you in a very objective way the idea where your risk is sitting, where are the invalidation points, and so on. And that's the real benefit behind the Elliott Wave method. I hope that can sink into everyone at some point, because too many people try to look into the future. A lot of people, wonder about, what could happen tomorrow. I mean, I had a question today, about BNB in the comments. Can you tell me if BNB is going to go to $330 tomorrow? No, of course not, Stay in the present, It's a bit like the Zen mentality, but stay in the present. You have to, because if you worry about the future, also in terms of trading, it will only hurt you, The value of a technical analysis doesn't lie necessarily in the predictive qualities. It lies in the produced trade setups that allow for low risk, high reward trades. Because only if you trade low risk and high reward, you can be successful constantly long term. Yeah, you want to be consistent, and you only get that if you follow objective analysis and trade setups. Because if you don't, then you really lie your success as a trader into the hands of the universe. Do you want to do that? I hope not, because I don't know, you want to be objective. You want to be able to measure your risk. You want to be able to measure your reward, and you want to just trade it. Yeah. And then that, okay, you have no idea if that one trade is going to work out, but within 20 trades or within 50 trades, whatever, 60% are going to work with that method. And then, you just go ahead with it. You get your confidence, and you don't know if it's going to work out. But you don't need to know, because you trade your setups and you know that, okay, maybe this one's going to fail. Maybe the one tomorrow is going to fail. But if you have 50, you know that in 60% of cases, it's going to work out. And that gives you your confidence. There's no need to stay in the future. If you stay in the future, you get emotional because you have expectations about a trade. And if you have expectations about a trade, you will get emotional if it doesn't work out. Whereas if you stay in the present and you just look at what you see, you don't get emotional. Yeah, you don't get emotional. If you lose or win a trade, it's just part of the game. All right, that's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.